The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 22nd day of March. My pleasure to be here Monday through Friday. Hey, this is a very interesting market. Thanks to our hosts, some great programming earlier on, starting at 7 o'clock in the morning, going all the way tonight till 6 o'clock with Andy Hecht wrapping us up. Let's go to the numbers. You've got the Dow down 33 at 17,590. The S&P is down 2 at 2,049. Comp Index is up 4 at 48.13. Gold is up 7 at 12.51. Silver's up 3 cents at 15.88. Platinum is up 12 at 9.94. High-grade copper's pulled back a bit. It's at 2.28, down 75 cents. Crude oil is 41.64, up 12 cents, and you've got bonds up almost a full point at 162 and 21/30 seconds. And as far as I can see, the dollar had a rally early this morning, and then it kind of gave some of it back. It's up only 18 cents now at 95.47. A couple of things going on here. So I think we need to go straight to look at the VIX index right now, the VIX.X. Still stuck in the, if I can actually print it up here, VIX.X. There we go. Trading at 14.31 in the mid-teens, up 50 cents. But until it really gets into the 16s, you're going to find that there are bouts of buying and rotational buying. The IBB, the biotechs were up 5 points Thursday, 5 points Friday. No, 5 points Friday, 5 points Monday, and about 5 points so far today. So there's this rotation going on. So we're looking at the volatility index. And as far as I can tell, it's suggesting, and it's only a suggestion so far, that actually I had a couple of questions. Let me just deal with it this way. At the end of the show yesterday, I had Paul sent me this thing, said, the VIX index spiked to 53 because it was controlled by fraud and corruption. Why don't you tell it like it is? I'm beginning to think you're part of it too. Demorocrats are destroying our country. I'm sure you won't be reading this one over the airwaves. No, I refuse to read this over the airwaves because why should I read it over the airwaves? I'm part of that conspiracy, Paul. I'm sorry to break the news to you. It was my fault. And I'll take all the credit for that. What can I say? Hey, this is be structural here. The volatility index, and certainly some of the VIX indices that are used for trading, I would say that they're not showing fund manager buying. That's really the reason why they've come down a bigger percentage than the market has actually gone up on some days. We're trying again to get into this. I think that the volatility index is really close to, if you look at the VIX index, look at this. It is really close. It must be within maybe a couple of days of having a real nice reversal to the upside to try to get over that 9-period exponential moving average of 1532. So that's the number one. Number two is you've got a left side, right side price time match, which has gone. Actually, no, I wanted to do it. Because it went under it, I wanted to take it to that level. Now, yes, we could go to the 1280 level. That would be quite something because that would suggest that this market is going to go almost towards the old highs. In the Dow's case, it would be 18,000. Let me just move that up. 18,351. And here we've got an exact left side price time match would say that that would take the VIX. And I think that's a possibility going into sometime in, let me just do it while I'm talking about it. Give me a second. A lot of callers waiting. And let me just close this out, move this to the right, space to the right. Let's go all the way to 16, see what we can get. And that would take you to an exact left side price time match of the 8th of April. So could we keep running until early April? hey, it's a possibility. My thinking was that we would pull back over the next coming days into early next week, and then we're going to see whether there's a test of strength, and then we can go strongly to the upside, and that's going to be the big challenge. Do we go to the upside, or does that level of support break down? I'll get into that as we move along. We've got tons of callers. We've got Steve in Myrtle Beach. Hi, Steve. How are you? Steve in Myrtle Beach.
Yes. Hey, Basil. Thanks for taking my call.
It's my pleasure. You'd like to look at
WATT Energy.
Okay. So this is a very interesting stock. I've got two. Let me just double check that I haven't skipped. I think I skipped something. 779. That has to be 80. That's a D. Okay. So this is a very interesting stock. Energous Corporation. So what form of energy? What do they do?
Well, they supposedly can wirelessly recharge things using Wi-Fi.
Oh, I read about this. It must be 2 years ago. Maybe it's 2 years ago.
Right. It went public a couple of years ago.
There was a technology that was developed at MIT, and there were big discussions about it. That what would happen if we were finally able to recharge in a very different way without all that wire connection. So this has done a beautiful left side, right side price time match from the high that was made back on the 10th of November at 963, plunges all the way down to the 365 level, 19th of January, and now in a different manner, in a stair-step manner, big spike up, pulls back, big spike up, pulls back. And each pullback, even though it went to a D, would have been probably taking you out with a stop. This is one of those that I think you've got to consider as a potential longer-term investment, because they obviously have something going on here. So that's the daily. Daily's gone to a leg E and almost an exact price time match to that left side high. The weekly has gone to leg A, leg B, and it's in leg C, still very strong. And the monthly has got probably the first real. I like this. Let me ask you a question. Have you got any?
Not right now. I have owned it in the past.
Oh, you've owned it in the past. Did you own it in the past and then it went lower, or you've been in the past, meaning since the low that was made this year?
Actually, I sold before the big drop and looking down to 365 and looking to reposition it.
Okay. The reason why I asked, a couple of reasons, but the most important reason is if you've had experience with this before, it's been on your radar, you've had success with it before, because this has been in the downtrend since it IPO'd, excuse me, back in early July, must have been, early 2015, ran to just over 16, and then it plummeted to the recent low of $3.60, $3.60, that is. I like that. I like the fact that you've kept your eye on it. That is part of the repertoire of what you watch. Here's what I'm thinking. If you've been in it before, I think this is one that's showing a characteristic here that is a little bit, in a certain way, independent of the market. But can you hold on? I'd like to talk about it. Okay,
sure,
we've got Steve in Myrtle Beach. We're looking at WATT, trading at 916, and we'll be right back with Steve and Scott.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. We're looking at WATT. It is the Energis Corporation, trading at $9.12, up 3 cents. In leg E, having gone to a left side, right side price time match in the daily chart, which means that this is kind of the area that you'd expect some resistance. We've got Steve from Myrtle Beach right here, and we're looking at it together. So, Steve, because you've got a real good sense of it, and the fact is that you probably wanted to get into it a couple of days ago, and it suddenly went a little higher than you expected. Is that correct?
Yeah, I did good avoiding the big disaster back in January, but didn't do a very good job of re-entering.
Why was there a disaster? Was it earnings or what?
Yeah, it was right after our earnings report, and there were some negative comments about the technology. Some people say, well, it really doesn't work, and they don't have FCC approval, and, there's some things like that. So it's a very controversial technology. Yeah,
it's one of those technologies, as I read about it, and I'm not up to date on it at all, but from what I read, it's one of those things you say, oh, man, if they could just be successful, that would just change the world. See, here's what I'm thinking. I would not get too carried away, but I would do a little nibbling here at $9.09. The real issue is that it keeps making these big spikes to the upside, but then it pulls back fairly sharply. So I would really want to look at it again between $8.47 and $8.12. That's kind of the area where if it can hold without breaking 8.12, preferably not break 8, but 8.12 is really the level that I'd be looking at. That's where I'd consider adding a little bit more. And that's really what I would consider my first real position. Because if it pops here to the 10s, something's going on that's being seen as very favorable.
Right.
And that means that you've raised the base. But just entering here at 909 will give you a real good feeling of houses. I'm expecting that there will be a market pullback over the next couple of days. And that's going to be a test to see, does it behave independent of the market, or is it really market dependent? If it's market dependent, that's a different kettle of fish. Then I'd be looking at waiting to see how it holds the low 8s. But if it holds really well, it's saying to you, hey, right now, there are some investors that are really looking at this favorably. The technicals are good in the daily. The technicals have improved a lot in the weekly. and the monthly is showing the first sign that it's going to try for $10.24, which is the 200-period exponential moving average in the monthly chart. I'm recommending nibble here. That's not your real position. Your real position is you have to have a little patience to see if it can pull back 50, 60 cents, and that's where the real test of support will be, and that's where I would suggest you. So how about, what's today, Tuesday? Friday, is there no trading Friday? Well, early next week, maybe is a very good time to be watching, and give me a call. Let's look at it together. But I do like it. I do like it. I'm just saying that the big move from the gap over the last 5 trading days says that it's getting a little bit toppy, and that therefore I don't want to overdo it. Nibble here. That's the best way to go.
That's great advice. Thank you very much, Basil.
Thank you. And it is one that I'll be looking at for the longer term. So thank you for reminding me about this. So, thank you.
No problem.
Good. Let's go to Scott in Safety Harbor. Scott, how are you?
Oh, Basil, you know, the Alcoa has just done so well for me, and you know, you've been with me that whole trip. You know, when it was 11 last time, and then headed back to 11 again now. But it's just been fantastic. But I'm completely out of it now and looking for a re-entry point. And I just want to say something about the previous call in the stock. You know, I know that you're trying to just help people with those, you know, whatever they pick. But I got to tell you, I played those kind of things for years, and I just get queasy when I hear people talk about these things. There's so much good stuff out there. There's so much stuff that's proven.
I agree with you, Scott. But Steve has been watching this for a long time. This is a stock that he's familiar with, and I think that he might be onto something. And I also believe that
it fascinates me, and I'm glad that people are like that. And I used to be like that. I would read about something in some sort of trade magazine or whatever, but I got to tell you, it never. And I'm not saying this isn't the case, but it never ever worked out for me. And finally started getting into blue chips that were at a discount.
Right, and you've had a really good eye for it. And also, I don't know about you, if you went back into Guild, I wanted to get into it 3 days ago, decided I wait. And
I told you about a week ago that I was going into it 1,000 shares. It was at the 88.50 at that point, and I did cash that out this morning. I got very fortunate. I got out at the 92.20.
Very good.
I still am back. I mean, I'm led again back to Alcoa simply because, you know, you can buy so much of it for so little, and
the percentage becomes quite big. Right. Now, let me just talk about Alcoa for a moment, because it's got a number of techniques that I look at, Chapman wave techniques. Alcoa has formed a particular pattern. Now, I hope I can do this here. I'm going to draw across the line right there. I'm going to say, let's see, I'm going to say new parallel. And I'm going to do this one more time. And I'm going to show the price time match. If you're looking at Alcoa, you will see that the high that was made, AA is the symbol, trading at $9.81, down 8 cents. Back on the 7th of October, it hit $11.18. And I said it's an alternative, could be an alternative wave count F/E, but if it's an F, it's going to pull back quite quickly. It went underneath the 9-period moving average. It came tumbling down, went on the 12th, I think, of November. It went down to, what was that? That was $7.81. Then it ran back up, and it went to a peak E in the Chapman wave, with a doji high on the 29th of December at 10.27. Now, this is what I want you to point out. I'm going to make this a different color. I'm going to make it pink. I'm going to make it nice and thick. Wait, let's go nice and thick. That parallel move in time and in price would correspond quite nicely if you were looking, here we go, at the move that went from the 29th of December at 10.27 down to a lower low of 614, and then it worked its way back, walking the 9-period exponential moving average to the most recent high on the 18th, that's on Friday, of $10.22. Right now, it's sitting on the 9-period moving average, but the MACD is flattening out and is hinting that it's making an H pattern that should break the 9-period moving average, should go under 9-period differential, should go underneath the red line, the slow moving average. The stochastic is way lower than it was before. On-balance volume is turning down, and a couple of other little techniques I've got in here, technical tools, are suggesting that Alcoa has used up exactly the same amount of time. Actually, it's 2 days more, but to the high was only 1 day more. And that says to me, Alcoa right now, especially since we've got the orange line, the 200-period exponential moving average. Let me make this a little bigger, because I know some people say if you can make your charts a little bit bigger when you're talking about them, there you are. It's suggesting that Alcoa is about to have a little bit of a timeout. If it's at 982. If it closes under 966, can you hold on a moment?
Yes.
Okay, we've got Scott and Safe to Harbor looking Alcoa. Dow's down 20. S&P's down 1. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhoads, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Just a couple of quick things here. We're going right back to Scott. I just want to say, for those of you, a question about Facebook, 10-minute chart, is it a buy? You know what? I don't think it's a buy right here. Facebook trading at 112.08, up 23 cents. I think it's trapped in a little range. Unless you're going for a real quick trade, I think it's kind of stuck. So I don't think I would even recommend it as a buy. I'm not sure I'd think of it as a short either, but just at this particular point. And the other thing is, I always like to show the folks. I did it earlier, but I forgot that I didn't during the breaks. I didn't do it during the show. Here's the E-mini. It's made a leg. The 10-minute E-mini S&P June has just made a leg D, a peak D actually, and I think that this is going to be really an important couple of hours that we're looking at. I do think the Dow and the S&P and the QQQ are all ready for some kind of a pullback. Let's go back to Scott. So Scott, what I wanted to just say to you is the commodities have acted well. Question of the den is, are all the commodities, are these related, especially the commodities themselves, related to the dollar's weakness? So I'm going to talk about that in a short while. But what I just wanted to say is I looked at U.S. Steel last night. I got a doji peak F with the MACD just turning down. Stochastic is still very good at 90%. So I think there's limited upside. And my thinking here is that Alcoa, USX, and you like to look at CX. Let me just get CX and not C. CX.
Oh, thank you, Jesus. I'm sorry. I can't be political here. That's CX. My wife wants to tattoo that on me in a very prominent place. CX really did so well for me. As you remember, I got into it when it was 386, and it's amazing.
Yes.
I made believers out of everybody, all my friends and family.
Before you get the tattoo, let me just say that CX right now corresponds with all the technicals that I'm looking at in these particular in the Alcoa, U.S. Steel, in the heavy industrials, and in CX, which is cement. So I think that they're going to be coming back to test the 200-period moving average, 9-period moving average. I think they're close to having a bit of a rest. So I just wanted to give you that.
I agree, and you can base it on charts and just a simple logic. I mean, it just did too much too fast, and the market doesn't like that. So
and you've done very well, so you can now have a little bit of a break and just enjoy what you've done. Get ready for the next serious buys coming up. Hey, thanks so much for calling, Scott.
Who wants to play with Facebook at $100, I mean, if you want to play with a $100 stock, Gilead, it's just waiting to pop.
Yeah, Gilead, I agree with you. Gilead's had a fabulous move. So thank you so much for calling, Scott. I'm going to go on to Dan in Miami. Speak to you soon. Hi, Dan.
Hi, Basil. Hi, how you doing?
I'm doing well, thank you. You'd like to look at?
I like your opinion on Goldman Sachs. I hate to do it.
Do you have a position in Goldman Sachs right now?
No, I think it's looks weak to me.
It looks very weak, and I've spoken about this before. I've mentioned that stocks. What was the stock that's right, Cooperman, one of the most respected fund managers on Wall Street, has got an SEC filing. I mean, he's got something going on. He's being looked at by the SEC. When a fund has that looming over you, the expense, you got to realize they're looking for something. They can put one person, they can put 100 people, they can put 1,000 people, and they could even put 10,000 people. It doesn't matter. When they put their hooks into you, and this goes for those funds. I remember what happened with Vinnick. I remember what happened with many of these guys. I remember also what happened with Goldman. It's not good. It's just not good to have that hanging over you. Also, it interferes with your regular trading because the stuff that you might have just been on the edge of the gray area, you're not going to do any gray area when the Fed is just there waiting for you. So I'm looking at Goldman Sachs and I'm thinking, wait a minute. Goldman could do nothing wrong. They've still got the same quality, the same integrity of, that is, the people. They've still got the trading techniques. They've got all the ammunition, and yet they have not been able to get out of their own way since they 218.77 back in 2015, plunging down to the 140 level. Just under 140. So I'm with you. I think this is acting very weak. Would you be thinking of shorting or buying a put?
No.
No. Okay. Well, I'm just going to say to you, if you're looking at it as where would you want to buy it? I would have to say.
I'm looking on the buy side as a part of the Dow as I follow, but the monthly made a higher low. Was my point, but I still think.
Yeah. So there are a couple of things that are starting to improve in Goldman Sachs, but not enough for me to even want to put it on my list as a potential buy, not even for an option trade. So I'm looking at it, and I think that you have to have patience at 154.06. GS is the symbol. Why don't you have a little patience? Let's see what happens. Give me a call if you see this trading at 148.50 to let's make it lower. 147 to 145. And then let's have a look at it together, because
There seems to have been some kind of issue this week. They're being investigated for some bond rigging.
That's never a good sign. So now, it doesn't mean to say that it's a short, because some of these stocks can hold up pretty well under the conditions. They just don't rally. They really, and this is exactly what we're looking at Goldman Sachs. Good eye, you picked it out as a weak stock at this point. I would rather see it make that H pattern. You know, I often talk about the H pattern. It made a beautiful H pattern from the 200-period moving average back in October of 215. It hit at 160, I think 7 or so. It rallied all the way to 200, came back and then smashed through that left side support, and it went all the way down for leg D to 139.05. And it just recently hit a high that was, it wasn't the high, 158.90. Previous high was 158.85. Oh, yeah, it made a new high. So that's leg B in the weekly. I think it's going to be pulling back. I'd be very hesitant to do anything with it. In fact, I would say to you that if it does come back and it starts to test, I would look at it as a positive and then look at the best of the financials, because that would say that if Goldman's going to rally, then probably the others would rally. And let's just have a look at Wells Fargo. It's a different character. They do different things, but it's in the financials. I just want to have a look, if you don't mind. Now, you see Wells Fargo, that's a much better chart, even though it also came off a low, because it's used the 200-period moving average to rally sharply. I would suggest to you that Wells Fargo at 50.28 will probably come back to the 49 to 48.5 area. That's probably one that I'd look at before Goldman Sachs. But you're right. Let's look at Goldman Sachs. If you don't mind, give me a call if it can pull back and you're still interested. Let's look at it and see if it's worth it. Because if Goldman Sachs starts to really rally and become a leader again, like it had been back in 2013, 14, and early 15, it'll fly, because that's what it does once it gets its legs together. Right now, the legs are a little shaky.
Okay, that makes sense. Thanks.
Good. Thank you so much for calling, Dan. So just if you have a chance and you want to look at it again, give me a call and we'll do it together.
Oh, no hurry. Thank you.
Thank you very much. So, folks, let's do this. There are a couple of things that I want you to look at. What I showed just a couple of questions came up there. Yeah, transportation index. I was going to do that. In any case, that's good. Thanks for reminding me, because I might have forgotten. So I've got a leg F. I'm calling this an F right now. It could be an alternate count, but this doji high that was made yesterday in a potential F, making a potential peak F at 145.85. If the IYT, the transportation iShares, pulls back in the next week under 139, we've made a short-term top in the transportation average at resistance in the weekly. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So the questions I had, a number of questions. So we did the IYT, XAL. Let me just do that because I want to go to the FAZ. XAL in this last, it's not the last segment. Oh, good. Time's moving along very nicely. So the XAL made a new recovery high. It looked like it was going to go down with a peak E, and then it landed up going to an F/B. So the week month A, B, C, and this is another leg C in the weekly chart. And there's the monthly chart with that Chapman wave falling X in the ARCA airline index, trading at 89.19 down 88 cents. This is very constructive, and I don't want to do anything just yet because I'm going to be on a Wednesday, tomorrow night a week. I'm doing, let me just show you this because I'm liable to forget. Right here, TFNN. A week from tomorrow night, that's on right there. The coming 3-month outlook in the market and which sectors could rally or fail. Basil Chapman will be hosting a 90-minute live webinar with subscribers to his opening call newsletter on March the 30th. That's 6 o'clock till 7:30. It will be archived, of course. So sign up now for a 30-day free trial to access this exclusive event. And I'm going to be doing a lot of things in that. I'm going back to the socioeconomic parallels with late 1920s, just a slew of things I've been working on. However, what's really important is that the big question, let me just show you a chart here that I showed my subscribers this morning. If I can just drag it across. Okay. Let me just see if that's showing up nicely. Yep, that is good. Yes. Now, in this particular chart, what you see is there's this huge move up and then a big pullback with an arch, a cup formation that failed halfway, and then it pulls back very sharply and it bounces along and it holds this long-term trend line support, and it starts to make slightly higher lows and much higher highs, but it doesn't take out that big top that was made over there. And what's really interesting about this is that there was a very sharp move. Look at the whippiness between that high and that low. Look how many times we've been there. This is very unusual. This is an index. And now look what's happened. So I drew within the parallel lines, within the trend lines I drew a little circle saying in this area there should be a turnaround, and that turnaround does one of two things. It either bounces up to that point of contact right there, and then it comes back down and retests these lows on the left side, or this becomes such an important event that all of a sudden it starts to accelerate to the upside. Now, what am I talking about? I'm actually talking about the Dow. This is the Dow chart, but upside down, because very often I send my subscribers a chart and I say, study chart, let's look at it. And we do the study upside down, because sometimes visually, look at that U-shaped pattern. Look at this, what was going to be a U-shaped pattern turns out to be a very sharp, almost like a V-shaped pattern. And the speed tells you that things could happen that are different. Now, if in fact you continue down here and you break that trend line, you'll be going all the way to that level over there. Well, if this is the upside down chart of the Dow, then let's just go to the Dow here. I think this is a good one. No, this is not a good one. Is this a good one? 120. Let's go to this one. Yeah, this is good. So here's the chart that I used. So this is the chart the way you see it as it is in real life. And what it's saying is this downtrend line has two downtrend lines. It has the dashed gray line, which takes you to that level there. It has the pink line, which says we've just broken above it. Now let me make this bigger. And it's saying that the Dow could, in fact, either break to the upside, go sideways in a very gentle move, and then try to go towards top side, or, and this is what I'm thinking, that we're in very close to some kind of a pullback, and that pullback should take us to the 17,300-ish level. That's going to be the big test, because we close sharply under that. You're going to break, you could possibly break 17,000, go back to the 16,900s. Big deal. But if you hold that and all of a sudden there's further buying, you could rally into April, second week of April, and go to that level there. And that level will be all those highs at the 17,890s, going into the 18,000 area. So my thinking here is that we could have a pullback and then a sharp bounce, and then sometime in April we could be starting a bigger move to the downside. This, of course, would have to move to the right. It can't be at the same level, but this is just kind of my thinking. So the way I'm dealing with it is I'm saying fewer and fewer stocks are the stocks that I want to be long right now. I've already admitted that on Friday, I wanted to buy the IBB. I'd already spoken on Thursday about it. You remember we had a call. I had Kevin from Sarasota. We were looking at it. From Sacramento, different side of the continent. And I hope that he managed to get into the long side of the IBB. And it's run very nicely. And if you have that kind of rotation, then you're only looking at a fairly mild pullback, because you're going to get the overbought stocks coming down. You've already seen the NASDAQ underperform because of those very heavy, big top 5, top 10 stocks just having big consolidations. So this is what I'm looking at. If, in fact, that's where we start to get the really bad news, then we can keep coming down. The next level of support will be somewhere around the 16,500 level. Now, I'm looking at reports that are people talking about 16,000 a cinch, because we're going to 15,000. Some people are saying 14,000. I just don't see it now. I see it later, but I don't see it now. So I'm preparing for it. Subscribers are preparing for it. We started short positions, starting shorting index, sentiment indicators shorting, or at least buying. So this is a very interesting period, and this is the analysis that I'm going to be spending a lot of time. I'll have the whole week in which the market's going to be giving us a tremendous amount of information over the coming days. My thinking right now, P in the Den says, Stockman, 13,000. Stockman's been talking about, well, I shouldn't say, I don't hear him very often, but I remember him, he was back with Reagan, wasn't he? And he then turned turncoat on Reagan, if I remember correctly. I mean, it was not nice what he did. So I've lost respect for him. I did lose respect for him. And he's been a bear for ages. It's like the guy in the Wall Street Journal. I can't remember what his name is. He always is negative about the economy and everything. All the way, 6,000 points up, he's been negative. You've got to be practical. You can say whatever you want that is negative if it's negative, but you've got to look at the positives. For goodness sake, if you do not like this administration, you just have to give them credit for doing the right thing for the stock market over all this time. To go from 6,500 or lower to 18,300 in the Dow, that was an incredible. Would you like to be at 6,000 now in the Dow? It's horrible. You could even be right by being short and making thousands and thousands, tens of thousands, a million. It's horrible because you can't talk to anybody. You can't walk around saying, whoo-hoo. You don't want to buy all those things to say, look how well I'm doing. It's better to be in a bull market, emotionally and in every other way. That's not to say that when the bear market finally comes, that we're not going to dive in. Okay, so we got one more section coming up, and the question was, and I'll go to it, is this the time to be shorting the XLF and Bank of America in particular? We'll talk about that as soon as I get back. Basil Chapman, Tiger Technicians Hour. We will be right back. Dow's down 33, S&P is down 3.
Hi, I'm Steve Rhoads, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Let me just finish writing that. Good. Okay. So the question was XLF. I've got it in a leg F. It could be an alternate account, but everything about it with a stochastic just starting to turn down. 91%, still very strong, but it is turning down. On balance, volume has already been turning down since its peak. D, even lower. And other techniques are suggesting that the upside might be limited. But in terms of shorting, I sometimes get a little nervous when a stock is so close to the 200-period moving average. This is the XLF, the financial S&P Select Spider Fund. At 2258, you got 2302 is the 200-period moving average. So it's going to be some event. Something's going to have to be the trigger. So this is what I'm just reading the question again. Yeah, this is what I'm going to suggest. I would prefer not to go to the, what did I say it was? FAZ, which is 3 times short. But the, what did Peaky say? I think that's the one that I prefer. If I can just find it now. Question there. So where did it go? It wasn't the XLF. It was, let me see if I can find it here. It was SKF. So the SKF is 2 times short. And I'm just going to suggest that at this particular level, there are signs that are saying that the MACD is close to turning up. The stochastic is giving a positive divergence. The weekly chart had a huge spike to the upside. It's funny because the FAZ weekly chart made a peak D. It made a low of 38.00 on the week of the 6th of November. Then the next pullback went to 38.06. You see, when you're dealing with ETFs that are based on a root of something else, then what happens very often is that you can get peaks and troughs that are not coinciding exactly. They're very close. My work, it has to be not very close, it has to be exact. So the FAZ has done it. So I'm implying that the SKF, I believe it was, right? SKF is going to, I can use the same chart formation. So this is what I'm going to suggest. If you want to do this, if you're looking at the banks as being, maybe the banks just hold up okay. They just don't break down that much, but they really don't go much to the upside. But if you're looking at it, then the SKF trading at 48.02, you want to nibble here and have a stop at 47.05. It's like a point. Make it 47, make it 46.99 instead of the round number low. Actually, I don't even care with the SKF because it's based on the XLF action. But somewhere here, you just nibble on it. At 48, you buy just like a few shares because you want to see how does it act and react in the real life market conditions. Otherwise, you're really not following it closely. And that way says if the SKF at 48.02 has any day that closes over 48.90 above the 9-period exponential moving average, you've got yourself something that you might want to add to. That's the way I would look at it. I wouldn't get carried away. Not worth getting carried away, but if you want to just nibble there, that's what I would do. Okay, now let's just go back to the story because you've got your swim lesson coming up, just a full house. You've got a swimming lesson, you got Steve Rhoads, you've got Dave White, you've got Tom O'Brien, and then you've got Andy Heck. Just a fabulous rest of the day. So here we go. The VIX index. I'm going to stick with the VIX because there's not been all that much buying in the instruments so far of the VIX. So I'm looking at the VIX at 1444. If by day's end, the VIX is trading close to 15, 14.83, 14.75, anywhere up in that area, and tomorrow is weak, then we're going to see a very quick move to the upside. If, in fact, the VIX sticks at the 1444 or lower level, then we might just have to wait a little bit longer before we get that pullback. But I'm looking at it because I think that when buying comes into the volatility index, and I actually prefer to see buying come in after the move down, after you've got a real nice profit, and then fund managers say, hey, we need to buy volatility because it's starting to move. I love that. I'd rather be in a little early, but early sometimes can cost you. Hey, this is Basil Chapman. I'll be back later on with Tom O'Brien. Have a great rest of the day. I'll see you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.